The point being here is expect corrections. You can expect anything between a 30 and a 50% correction to happen, and you shouldn't be fazed by it. You should be actually looking forward to them. So that's what we're doing now. That's the kind of cycle we're seeing now. So if you're dealing with too short a term time horizon, trying to top and tail it and time it, I think you'll fuck it up. I simply do. I think you'll miss the move. The best thing to do is to try and scrape the sofa for change and stick it in the markets when you get a sell-off of any magnitude. Because guess what? It compounds really fast. That's why I prefer to add on the dips and not try and trade it around. Because often you get sidelined just when you shouldn't and the market's ripping and you can't get back in.
In this market analysis, Raoul Pal is about to share a massive update that most investors are not emotionally ready to hear. After months of wild swings and non-stop volatility, he believes a sharp drawdown may still be ahead. Not a small pullback, but the kind of correction that shakes confidence and forces mistakes. The question is not if it happens, but how you react when it does. Is this a warning or an opportunity hiding in plain sight? He will break down exactly why corrections might actually be the most important part of this cycle, and why trying to time every move could cost you the biggest gains.
2013, I got in around here. It then had a 71% pullback. Now, this is early stage. So this is like a smaller token now, probably something smaller than Solana, more like an alt would trade. So in what looks like a sideways market, it actually did a down 71%. And then it did a 15x into the end of the year. So that's kind of how alts act in this. This is when Bitcoin was essentially an alt. It was a small cryptocurrency, not yet with full adoption, not yet proven. Okay, then we go into the 15-17 cycle, which I think is a very comparable cycle to now. We talked about 2016 with the spasm. Well, before that, we had a sell-off of 35% in 2015. Think about those cycles that repeat. The election years are always the macro summer years. So then we had this 40% pullback around the banana zone. The boring zone. So this is the boring zone area where around the Bitcoin halving. And that period, you saw a sharp sell-off, pretty nasty, and then eventually it broke high. And then we had another 38% pullback before you really got into full bananas. That's how this works. The banana zone is not about here and today and break out immediately. It's a process by which prices accelerate over time once they're free of the ranges that they're in. That does lie ahead. I know there's a lot of people like, oh, Raoul, and your fucking bananas, you're a top signal. Listen, you're not listening. This is not a short-term timing signal. This is the structure of markets I'm trying to talk about. But that was that cycle. There was some pretty brutal. There was 35 to 40% pullbacks. And what a cycle that was. By the end of 2018, this thing had really flown. Okay, so this is the 2017. That was after those corrections. We had 4 more corrections of 30 to 40%. This should be looking like Solana, where you start to see these sharp 30, 40% pullbacks, and they're just pauses that refresh, and you keep going higher as the banana zone kicked in. So even with 4 30 to 40% pullbacks, Bitcoin went that year from, I don't know, I'm just eyeballing the chart, 1,200 and ended up at 20,000. Okay, I'm not saying we're going to repeat that, but this is the kind of thing that plays out. So if you're dealing with too short a term time horizon, trying to top and tail it and time it, I think you'll fuck it up. I simply do. I think you'll miss the move. The best thing to do is to try and scrape the sofa for change and stick it in the markets when you get a sell-off of any magnitude. Because guess what? It compounds really fast and the gains come much faster. You'll be back at all-time P&L highs before anybody else. That's why I prefer to add on the dips and not try and trade it around, because often you get sidelined just when you shouldn't and the market's ripping and you can't get back in. 2019, well, that was a tricky one as well. We had a 54% pullback in Bitcoin between June and December. Then we rallied, and then we had a 62%, and that was obviously COVID when the world shut down. So you've got to be prepared for the volatility to be able to deal with these things. I don't think we have a repeat of 2020, but 2019, you know what? It's possible. I don't think that to be the case, but maybe something more protracted in the Middle East could cause something like that. But again, in the end, If your time horizon is long enough, it doesn't matter. And if you can buy, that's when you make generational wealth. So, real wealth, how to unfuck your future is to take advantage of the sell-offs and not fear them. As long as you're in spot, not using leverage, you're not in the stupid last cycle shit. You're in the coins that matter. I urge you just to be slightly more conservative. Conservative still means huge gains, but I don't want you to miss the opportunity or to get carried out just when the opportunity is arriving. The point being here is expect corrections. You can expect anything between a 30 and a 50% correction to happen, and you shouldn't be fazed by it. You should be actually looking forward to them.
Raoul Pal continues to say something that almost nobody expected. Staying in crypto is not about being smart, fast, or lucky. It's about understanding cycles and having the emotional strength to survive them. According to Raoul Pal, crypto is not easy, but it's also not complicated. Most people lose not because they don't understand charts, but because they react at the wrong time. Raoul openly admits that when he first entered crypto, he made the classic mistake: buying high, selling low, and trying to time every move. Looking back, he says the simplest strategy would have beaten all that stress, just holding through the noise. One of his biggest lessons is this: the biggest moves always come after corrections, not before them. Corrections are not a sign that the market is broken, they are part of how the market breathes. He points back to 2013 when Bitcoin was still small, basically an altcoin. Back then, Bitcoin went through a brutal 71% pullback in what looked like a boring sideways market. Most people gave up. But what happened next shocked everyone. Bitcoin went on to do a 15x move into the end of that year. The pain came first, the reward came later. Raoul explains that at the time, Bitcoin didn't feel like a sure thing. It wasn't widely adopted, it wasn't proven, and that uncertainty is exactly why the opportunity existed. Markets don't reward comfort, they reward patience. Then he compares that period to the 2015 to 2017 cycle, which he believes looks very similar to today. In 2015, Bitcoin saw a 35% sell-off. People were tired, interest was low, but then came the rally into the end of the year. Sound familiar? Around the halving period, Bitcoin entered what Raoul jokingly calls the boring zone. Price moved sideways, momentum slowed, then came another sharp pullback, around 40%. It felt nasty, but instead of collapsing, Bitcoin eventually broke higher, and it didn't stop there. Before the real explosion, there was another pullback, around 38%. That's 3 major corrections in one cycle. This is the part most people don't talk about. Everyone remembers the upside. Almost nobody remembers the pain that came before it. Raoul emphasizes that the so-called banana zone, the phase where prices accelerate, does not start instantly. It's not a straight line up, it's a process. The market needs time to shake people out, reset leverage, and build energy. He gets frustrated when people say his bullish views are short-term signals. They're not. He's talking about market structure, not timing tops and bottoms. Trying to trade every move usually ends badly. You sell during fear, then watch price rip higher without you. We saw this again in 2019. Bitcoin dropped 54% between June and December. Many thought the cycle was over. Then the market rallied, only to get hit again by a massive 60% crash during COVID. That wasn't a crypto issue. The whole world shut down. But once again, those who survived the volatility were rewarded later. So what does this mean for today's Bitcoin market? It means the sideways action, the sharp pullbacks, and the frustration are not signs of failure. They are signs of a healthy, volatile asset moving through its cycle. Raoul believes we should expect more 30% to 40% pullbacks. That's normal. That's how strong trends continue. His advice is clear: if your time horizon is too short, you will likely mess this up. Trying to perfectly time tops and bottoms usually leads to being sidelined at the worst possible moment. The market moves fast when it moves, and it doesn't wait for anyone. Instead, Raoul prefers adding during sell-offs, even small amounts. because compounding happens faster than people realize. When the market turns, gains come quickly, and those who stayed patient often reach new highs before anyone else. Crypto is not about avoiding volatility, it's about being prepared for it. If you can survive the boring zones and the scary pullbacks, you give yourself a chance to be there when the real move begins.